Everyone. I welcome you all for this presentation. Myself, Suganya, belongs to Commerce Department, Mana Tirumala Nayakar College, Madurai. I'm going to present a topic on introduction of income tax. So let us see what is meant by tax. A tax is a compulsory financial charges imposed by the government on individual as well as business to generate revenue on public expenditure and development activities. The next one is five fundamental characteristics of taxation. Number one, fairness. Number two, adequacy. Number three, simplicity. Number four, transparency. The last one is ease of administration. So we will see this one by one. First one is fairness. The taxation should be a just and equitable one. It means that it must pay their fare based on the based on their ability of the individual and ability to pay. For example, if we take a luxury car, it attracts a more GST rate than the essential food items. This ensures that the rich people can pay more than the poor, so the poor cannot be burdened. The second one is adequacy. The tax system should generate a more revenue to the government to meet the public expenditures like education, health, and infrastructure. So, the GST system brings multiple indirect taxes under one umbrella, ensuring that steady and sufficient revenue for both the central as well as state government. The third one is simplicity. The tax laws and procedures, it must be an clear and it should be understandable one, and it must compel with the taxpayer. So under GST, the taxpayer file a return online through the single portal instead of moving on to the multiple taxes and the forms earlier. So it will returns file through a single portal. The next one is that is fourth one, transparency. It must be an clear and open to all. The taxpayer should know how much tax they are paying and where it goes. Say for an example, the GST invoice clearly shows the tax amount and their rate. For example, CGST, SGST, and IGST on each product, and it ensures the visibility and accountability. The next one is ease of administration. So the process of paying the taxes and claiming credit, it should be an convenient one and digitalized one. Then it must be a time saving. So through the GST portal, business can file the returns, they can make payment and claim input tax credit through an online mode by reducing the manual work and delays. The next one is direct taxes. So direct taxes are the taxes which is directly paid by the taxpayer. So here the direct taxes are directly paid by the assessee to the government. Here the assessee means taxpayer. So the direct taxes means the person who earns the income, he must pay the tax directly to the government. The burden of the tax cannot be shifted to anyone else. So these are all the taxes comes under direct taxes, that is a wealth tax, property tax, corporate tax, and income tax. We just remember this by keeping in mind webpro.co.in. So WE, it means that wealth tax, PRO property tax, CO corporate tax, and another one is income tax. Next one is indirect taxes. Here, the tax burden we can indirectly shifted to the another persons. So when the tax burden is indirectly shifted to the another person, is termed as an indirect taxes. So we just keep in mind, excuse me, X stands for excise tax, CU stands for custom tax, SC stands for service tax, M stands for market tax, and E stands for entertainment tax. These are all the tax comes under indirect taxes. Next one, we are going to see a differences between the direct tax as well as indirect taxes. So, as we all know, direct taxes, we cannot transfer the tax burden to the another people, but in indirect taxes, we can indirectly shift the tax burden to the someone else. So, the first one is imposition. In direct taxes, it is imposed on income or profit. It means that the income tax is charged based on their income or based on their profit. In indirect taxes, it can be charged through their purchasing their goods and services. The next one is taxpayer. Who's called as taxpayer in indirect taxes? The taxpayer may be individual, HUF, firm, and companies. But in indirect taxes, who's called as a taxpayer means the final consumer or end consumer of the goods and services is denoted as a taxpayer. Third one is applicability. So direct taxes applied to the taxpayer alone, but in indirect taxes we can apply in every stages of the production and distribution supply chain management. The next one is tax burden. The tax burden is fully charged on the individual person alone. It cannot be transferred to another person. But in indirect taxes, the burden is shifted to the someone else, like a customer by the manufacturer or service provider, like that. Next one, transferability. Direct taxes cannot be transferred because he is the person who only bears the tax burden. But in indirect taxes, we can transfer this to the another person. Next one is coverage. So the direct taxes is covers to an entity or an individual taxpayer, but in indirect taxes, it has an very wide coverage because all the members of the society are being taxed. Next one is administrative cost. Direct taxes involves higher tax administrative cost as well as the it has a many exception, but in indirect taxes it has a lesser administrative cost because of the stable and convenient collections. Next one is tax evasion. Tax evasion is possible under direct tax, but in indirect tax is not at all possible. Finally, allocative effects. In indirect taxes, it has a less burden on the stages of collection, but in indirect taxes, it has a not a well-known or not a good those kind of direct taxes. Thank you.